Hello, everyone, and welcome back to another lunchtime hour with your host, Jose, and myself, Neil, the Couch Investor. Episode 16, I believe it or not. Episode 16. Welcome, everyone. Welcome. Hello, Jose. How are you?
What's going on, Neil? And what's up to everybody here? Just want to shout out to everybody, Jonathan, Mimi, Jordy, Victor, Martin, and everybody just tuning in. We appreciate all the support. So thanks for spending maybe the next hour or so with us. How's it going with you, Neil?
All good. All good. I see my favorite viewer, Victor, is in the chat. He always reminds me that I'm not his favorite financial YouTuber. So at least he's consistent.
That's what you like to get, right? Consistency.
Oh, he says
Neil,
I'm getting close.
Okay, that's good.
Thank you.
Neil, how's the stock market today? I was good, busy, so I have not seen how things. I know yesterday we had earnings with Marvell, and look, pretty red. I see. Okay, maybe I should just go back to sleep and close the day out.
Yeah, I mean, I knew it was red, but this time, I mean, the last time we checked, we at least had health technology a bit in green. We at least had some consumer non-durables a bit in green. But this time, it's red day overall. Although I think about a couple of minutes ago, I think Google and Uber were the only ones that were green, but now maybe not.
Yeah, so it's what's in your mind right now, Neil, when you see kind of red days like this?
To be honest, nothing. Just volatility. I mean, maybe I wished I had bought the VIX, right? So just because we knew that volatility was coming. So maybe as a hedge, owning something like that. But yeah, nothing. I've been adding to existing positions. I like the prices that I'm seeing for getting. I mean, it's all about tariffs and some job numbers, although some of the job numbers were actually better than feared. But I guess we are looking just at the negativity, not the positive stuff. So, okay, I guess there's that. But the tariff thing, every 24 hours, I guess there are other headlines like tariffs are starting. And then it's like, no, actually, might only start a month from now, might only be these sectors, might be reduced, might not. So I'm like, you know what? I don't care. I don't care. You want to give me cheap shares? Fine, I'll take it.
Agree, Neil. And I feel like maybe one of the things we've been seeing in earnings, at least the past week or so, is earnings maybe not beating guidance estimates, or just kind of meeting it, which is not what the market likes to see. But a part of me is wondering it, and obviously this has kind of created maybe a bearish thesis of the overall economy that, hey, look, even companies now are kind of predicting some form of down cycle in the upcoming months. Now, that's one way to look at it. A kind of way that I also want to look at it, Neil, is maybe obviously with all this noise happening all over the world, it's just the visibility is not there. It doesn't mean it's a guaranteed downturn, but now like CEOs give the don't want to overpromise too much. And I don't think that's necessarily kind of um guaranteed that we're gonna get maybe some bad numbers next quarters or the quarters after that. I just think CEOs just want to be prepared at the moment.
No, I agree. I agree. And I mean, if you want, we can touch a little bit on Marvell, and then maybe some expectations for Broadcom later today. I know yesterday there were quite a lot of executives that did have some talks with some analysts. I've read some stuff from Colette, Nvidia CFO. I've read some stuff from MJ from Intel. So plenty of information that came out in the last couple of days. So I don't know if we can go over it in this hour, probably next week, so we have time to digest everything during the weekend. But a lot of moving pieces, and to be honest, volatility should be our friends as long-term investors, because like you said, everybody's being careful a little bit right now. Guidance for a lot of the companies were maybe not as good as expected, right? Marvell prime example, beats across the board. Even with guidance, that was a beat, and yet the stock is down. I don't know. Last time I checked, 17%. Probably now with this whole red day, probably a bit more. But yeah, what did you make? I know you made a video about Marvel. What did you make of the quarter in the comments?
Um, we can Marvell. I mean, I thought the quarter was great. Again, I think this is another company, Neil. This is kind of doing the refresh of AMT. So AMT in early 2024, right, Neil, we kind of started to see maybe some movements in the AI sector for AMT. And then we kind of saw that stock price balloon to like $200. And then eventually the market started to see, hey, look, you're expected to grow in the AI market, but your overall total revenue is not growing. And that's because AMT was very diversified into different industries. That's what I would say one of the things happening with Marvell, where the last 2 quarters we've heard about kind of all these AI chips with Amazon and stuff like that, which is coming. And like they kind of talk about it in the market. And I'm not saying that's not I think there's still a very much bullish thesis for Marvell, but in the short term, I think again investors were expecting this massive AI run, but very similar to AMD, it's very diversified. So I think on a full year basis, the company's revenue was only up like single digits. And it's like, how can you be an AI company and you're up single digits? Now you have this story where the tailwinds are going to be coming from those other markets. And I think that's going to help accelerate the growth. And they did mention that they're going to see even more stronger numbers on their AI revenue this year versus prior expectations. The second thing, Neo, is very similar to AMT again. They did not want to really break down how much they made in AI revenue. They just kind of say, hey, look, for this year, we had a target of 1.5 billion, which is so small. Like I'm pretty sure NVIDIA makes this a week or something in AI revenue. So they made it in a year, and they said they just exceeded that target. They didn't give a number of where it was, very similar to AMD. And then for next year, they mentioned that it's about 2.5 billion, and they're going to exceed. So they're going to surpass that number as well. So that's the only color they gave. Now I think there was also two other things that maybe investors might be worried about. And again, this is just a guessing game at the end of the day with price action. There are discussions that Broadcom is maybe gonna design a chip for one of their customers in the future. So during the Q&A session, that came in, and they were like, "Look, we can only talk about that we're working with their current XPU and their next generation XPU." So pretty much they just gave confidence for at least this generation and next generation. But I wonder if for some reason investors were looking for more security, right? And it doesn't seem like Marvell gave that. And the final thing is, I think NVIDIA last week mentioned that just because chips are designed doesn't mean that chips are going to get built. And even though Marvell mentions that they have a lot of chip designs, these take long process. So if now you're not seeing the revenue, in the first half, you're going to see it most likely in the second half. But in the second half, you have NVIDIA releasing their Blackwell Ultra. So now at that point, you kind of have like more risk of some of the players saying, "Hey, look, maybe I don't need to produce this chip. Maybe I could just go with the Blackwell Ultra as it's way better performance." So I think maybe the market pushing out some of the growth later on. Now you have that added fear of the competition from NVIDIA's next generation. So again, it's just a guessing game, but those are the ones that I would kind of think about outside of just all the macro events that we're seeing right now, Neil.
No, well put. I mean, I like what you said at the start. It's a bit similar to what we've seen with AMD, and I think you were right. I think, and the same with Broadcom, right? When Broadcom was above $200, was going higher and higher every day. I think we're seeing the same thing here. When you're priced to perfection and you're not, and even with the beats that we've seen with Marvell, if you're not beating and raising, it's not good enough. And I think that's what we're seeing here. Plus, with Marvell, like you said, there are other segments in that business that have faced lots of headwinds. So I think with the automotive part, with the enterprise networking and all of that, year-over-year comparison are going to get way easier going forward. And I think that's going to help the business. A bit like with AMD, when the gaming, the embedded side of the client was doing quite well. We are going to see, because now 75% of revenue is data center for Marvell. So the other parts should now be helping that as well, if there is a little bit of weakness in the short run. Now, right now, of course, forward multiples have come down closer to 30, which makes this much more attractive than where it was before. That's for sure.
Yeah, I agree, Neil. I mean, like you mentioned, now it's going to be easier to kind of show those comparisons in revenue growth. I think for quarter one, now this would be, if the numbers they give on midpoint, it would be about 60% year over year growth. Now you start to say, oh, maybe this is really an AI company, but it's not that its AI is growing not as fast as now that the other markets are going to be able to, they believe they kind of seen some of the bottoms in some of those other core markets. The final thing I would say, Neil, is one thing that maybe kind of brought a question is sequentially, they only expect data center market to grow single digits. I think that was another kind of scary portion where this most recent quarter, it still grew at like about 24%, I believe, year over year. But sequentially, they mentioned that now for this upcoming quarter, it's only going to be mid single digits. Again, with kind of these custom ASIC solutions, it could make revenue a bit lumpy. You might have a quarter where you just where like these customers order massively, and you see that in one quarter. So I think it's going to be better to look at things in like the trailing 12 months of things.
Yeah, no, I agree. Have here a super chat from David. Thank you very much. Hey guys, filled my boots with Nebius today. Nebius, let's see. I've seen it come back under 30, and yeah, we're back at 27. So we're back at. It's funny, we're now back with multiple names that are back at the DeepSeek crash, which Nebius was around $26-$25 or so. So round trip, I would say, which makes this now much more interesting. As interesting as it was back during the DeepSeek crash, and I think that's what we're seeing with plenty of names out there as well. But at least now we have a bit more information on most of the companies after this earnings season.
And Neil, someone kind of talked a little bit about TSMC. I don't know where it was, but it gave me a topic that I was thinking about a few days ago. I think 2 days ago, we talked about that TSMC investment and why TSMC would want to kind of invest a little bit more here in the United States outside of Taiwan. And another kind of point that I just want to bring up is one thing that we are seeing is these fabs are becoming a lot heavier on the infrastructure in forms of power. So I wonder if something like that also came into play when deciding on building more. If it's like, hey, look, maybe right now we're seeing this huge growth in the semiconductor space, but maybe we don't want to overload infrastructure so much right now, and maybe we got the okay to move into other players. So I think there's so many variables that can come into here in the TSMC investing in the United States. It's not just one story.
Yeah, I've also seen some reports that are saying that the $100 billion number, it includes also a previous number that they gave, I think 65 billion or so, that was still, because they already committed a lot of money previously to build in the United States. And I think that there was still 65 billion dollars left or so, and that might be included in that number. So a lot of moving pieces here, political games, etc., etc. Of course, eventually it would be great if more and more chips were made in the United States and the supply chain gets a bit more diversified. So right now we'll see. We'll see. I think I've made that statement on X today. I think there is an AI bubble, but the AI bubble is in the private sector, not in the public one. In the private sector, you have like OpenAI, what was it? Over $300 billion. You have XAI, I don't know, 75 or whatever, Anthropic and all of that. And then you look at the publicly traded companies and you're like, how does that make any sense, right? We've seen Alibaba more recently come out with their own models beating the rest. And Alibaba alone, the whole business is worth $350 billion. So you're going to tell me that OpenAI is worth as much as Alibaba? It just doesn't make any sense. So in my eyes, the bubble, because everybody's talking about a bubble, I think the bubble is definitely in the private sector. Way too many companies have started to raise money at insane valuations. And at the same time, you have the public markets where you have an AMD at $100 and NVIDIA at 115. A lot of these stocks are already oversold if you look at some technical analysis. So it's it's quite interesting, not gonna lie.
Yeah, and I agree with you, Neil. I mean, I think some of these, like you mentioned, some of these companies trading north of 100 billion valuation, like OpenAI, and some of these players that I think are super important and barely have a market cap of like 80, $70 billion. I do think most of the bubble is within the private sector, and we're seeing it a lot kind of in the speculative play here, in the public market. So again, obviously we're seeing, I mean, Meta's down 3%, Nvidia's down 4%, Amazon's down 3%. You would think all these companies were game over from now. And I want to say in forward valuations, I don't think any of them, especially Meta, yeah, obviously Nvidia's not, but I don't think Meta, actually it might have, I know it had like a 20-day run rate of just positive news, but PE ratio right now, 26, forward 1 year is 25. Not crazy expensive that I would see bubble prices. Maybe a little bit overvalued than normal, but nothing that I would scream, hey, look, this is gonna destroy valuations for a player like this.
I agree. I think even with an Amazon, it was also, God damn it, these ad blockers don't work these days. The heck is this? Even with an Amazon, I think when it went under 200, and maybe today with that drop, we're back in oversold territory, which is quite crazy when you think of it, because all of these companies reported great earnings. Great earnings. Guidance was definitely not bad. Some of them were actually good. So yeah, to me, it's a strange time, but then again, it's the public market, so it reacts to day-to-day news. The private sector doesn't really care much because they're anyways locked up until they go public. But yeah, if I compare now publicly traded companies in AI that actually generate revenue and profit to the privately held ones that are being pumped up, let's be honest, being pumped up by a lot of folks, it just doesn't make any sense. And it makes me more comfortable buying the publicly traded companies today at these prices.
Agree, Neil. Here we got a question from Ricardo Costa. Marvell, Jose, your thoughts. We kind of talked a little bit about it in the beginning of this episode, Ricardo, but just a too long to watch. I'm bullish in the company at these prices. I do believe they can benefit from the AI space. I think the market, though, is going to continue to maybe see this as just a pure AI company when they have a lot of diversified revenue. So I think I see this more of like AMD style investment where you're looking for a company that has AI potential and can also kind of grow in other industries. So Yep, I like it here at $70. I like it, but maybe I'm just biased. I think my cost basis is around 59 for Marvell, so it's getting really close to kind of like my cost basis and where I would want to add more to my position.
I've seen. Have you seen some AMD reviews of the 9000 series? Because now it's on sale today, and I've seen already a couple of folks and a couple of posts saying that well there is supply, but then a couple of hours later it's like it's sold out already.
I mean, I feel like in the GPU market, that's always the case, no matter even if it's NVIDIA or AMD. I think what I'm really excited about for AMD is all the great reviews. I think we might have talked about it on Tuesday, but I continue to see great reviews on YouTube where they kind of tell NVIDIA to shut up for saying that the 5070 has performance of the 4090. And NVIDIA, AMD kind of playing the other route where, look, you get 5070 performance at $150 less. What's the right move? So as an NVIDIA investor, I'm not too worried about that just because unfortunately, gaming's isn't a big deal for Nvidia right now, but for AMD, this can be a huge benefit. I mean, they talked about it. I know we mentioned it in earlier this episode that there's a lot of conferences happening for investors, and I think AMD was Monday, and AMD mentioned one. I forget who it was, their CFO or someone else mentions that their revenue growth took a huge hit last year, obviously, because a lot of their core markets were pretty weak. But they're seeing huge growth right now. I mean, you talked about it, Neil. Their CPU is doing really good. Now they will be able to gain a more revenue in the gaming market, and all that can really show a nice overall revenue growth for this fiscal year. So many might say, hey, look, the gaming market isn't that crucial. While it's not crucial, I do believe it can help accelerate that revenue growth, which will make investors a lot more excited for AMD.
Yeah, I mean, it can be very crucial, right? Because $1 billion here, $1 billion there for a company like AMD is a lot. Like compare for Nvidia, $1 billion, okay, might not be much because they generate what $35 billion just from data centers, but an AMD, an extra $1 billion coming from gaming, is a huge increase to the overall revenue profile of the company, increases profitability as well, and gets their name back in the game. Because if the GPU that goes into the gaming segment gets more and more adoption, more and more developers to that platform, because there's obviously a software side of things here as well, that might propel the company forward and towards better things, especially when it comes to well the data center side of things, because they've been a bit behind on that. But I do think that if they can be successful with gaming, I think we're going to have a field day when it comes to the MI400 next year, especially also with the software integration.
Let's see, what else do we have? Let's see. I'd like to.
Thank you, Dividend Master.
He paid you with that dividend he got. Scoops, would Nvidia go under 100? I'm gonna say in the short term, Neil, I wouldn't say it's impossible, right? In the market, anything is possible. Definitely, if we do see that, I think it would continue to be more just a whole market thing and not just an individual Nvidia thing. So would it? I would say it's possible. I don't know if it is. Thoughts there, Neil?
I mean, I know a lot of people wouldn't mind Nvidia to go under $100. So everything is possible in the market, right? It goes $100. I think it will find a lot of buyers. If we're being honest, I think a lot of buyers will be found there under 100. There, yeah. Go ahead.
Oh, go ahead, Neil.
No, because I've seen some comments here about Match Group. I don't know if you follow that company, the dating apps group. Do you have an opinion on that?
No, definitely not, Neil.
Yeah.
I've been married for a while and been with my lady for a while, so I never used their products, and I don't know if I would really look into the stock. It's not a market I would get excited about.
So I'll
I
keep it
have heard
short.
though. I have heard from like single user that now AI is becoming more of a important thing, like for AI dating, which is pretty interesting to think of the AI space going there.
So you're telling me we're swiping left and right and we're only seeing AI avatars?
No, I think it's like I guess it reads your profile and it reads the profile of the other person and it kind of creates some form of like first message that I guess will optimize the chance of response based on something I guess you both can tie up with together. So I mean it makes sense to in my head that that's a lot of data that they have already. So be able to kind of curate a great message first. And but who knows? Is the response just going to be AI, and then you're just responding back and forth using AI messages?
It's like, hello, I'm sorry, I did not get that. My opinion on that, to be honest, I don't like these companies, don't like these apps either, because their job is to make sure you never find the one, because once you find it, you're off the app and they lose money. So what's the point here? And I've seen a couple of videos on YouTube that explain the algorithm behind it. Very, very manipulative, to be honest. So they might be making a lot of money. I don't know, but to me, it's just zero interest in those companies.
Now, Neil, I know you did a Marvell video, and I think you're also planning on covering Broadcom. Any thoughts on earnings today, especially after kind of like, I think the market kind of sees Marvell as like the little brother of Broadcom. Um, your guess, and I'm pretty sure whatever our guess is going to be the opposite of what the market reacts. But what do you think of Broadcom going into earnings after Marvell's downshed?
Well, I hope I won't be drunk to make a video, because I'm going to drink my losses away later. But I know Broadcom is a stronger company in my opinion. Now, stronger, as we've seen, doesn't really matter these days. I think they'll report an okay quarter. I think there will be beats across the board. The question here is guidance going to be enough? Um, are we going to get more commentary on future announcements, future customer wins, and stuff like that? Because that was a concern, like you said, with Marvell. Is that going to be a positive thing for Broadcom? Remains to be seen. The stock did drop a little bit. Let's see where we're at right now. I think we're back at the 180s or something like that.
Yeah, and I saw it's back to before we kind of saw this huge gain we saw last earnings. So it's back to its pre-earnings number of like early 180s or almost
Yeah.
around there. So yeah, I like you mentioned, this is a little bit more diversified and a little bit stronger. They did that cloud acquisition a few quarters ago. So they kind of have other market that strength in the cloud space can definitely make the difference between what Marvell is seeing and what they're seeing. And obviously Google with their TPUs, that's a product that's already ramping already. So they could be seeing that revenue further accelerate right now.
Yeah, no, I agree. I think we said it a couple of times, right? Even when it went higher and higher, we said it time and time again. I think the market is just running ahead of itself. Didn't make sense for it to be already at 220, 210. So now back at 180, forward PE back to the 30s, low 30s. So much better positioned right now. It's always better to have like less expectations going into an earnings report. Price didn't go up, price actually went down. Of course, lower can always get lower. I mean, where did we see a bottom last time? 160 or something like that. So who knows? Who knows? Another 10%, 15% drop after hours is not out of the discussion here. But then again, it's a great company with great leadership. And yeah, whoever wants an opportunity might get it after hours or might not. Well, we've seen stocks jumps.
The only other thing I know that I would say is there have been a lot of rumors that due to export restrictions, one of their big customers is kind of ending a deal with them. So if they discuss that, and again, I think in the market, even if you say export restrictions or whatever, the market's gonna be like AI is dead, AI is dead. So that could just kind of trigger more negative reaction in already a really negative sentiment market.
Yeah, I want to hear your thoughts on this. No, not this. This
I
market
agree.
hasn't crashed yet. Chill. Do you feel like the market has crashed or has not crashed yet?
I mean, I believe stock prices can always continue to go lower. I'm never gonna doubt that. I don't know if I ever look at things like in a stock market crash. I look more things in like a risk to reward ratio. And obviously, as stock prices go down, my risk to reward ratio increases. I think kind of hoping for a complete crash. If it happens, sure, you have cash at hands, that's great. But I tend to look more at risk to reward ratio mindset, and I think that has helped me a lot in the overall market. But I mean, if we start to see more macroeconomic pains, if we start to hear more discussions of more tariffs, more retaliations to tariffs, that can definitely create more of a negative sentiment to the stocks in general. But I don't think individual companies are telling me that there's something bad with their products. So that's why I'm not necessarily too worried. And I think we say it time and time and again here, Neil. Money that we have in our portfolios, money we definitely don't need anytime soon.
Agreed. Agreed. I think, yeah, I don't think the market has corrected itself. I just think we went a little bit lower. I think what 6%, maybe now a little bit more. Definitely not a correction or a bear market, but there are definitely stocks and sectors that are in a correction for sure. And I think if you just look at certain big popular stocks that are down 20, 30s, I mean, Marvell is down 40% since its recent high. So there is definitely corrections across the board. The market itself, no. But then again, like we said last episode, compare it to 2021, 2022 bear market. Back then, valuation for all of the companies were just insane. Today, we're at much better levels, much better levels. So a correction to me would mean that, well, we're getting the deals of the century, because a correction now would mean what, another 10-15% drop or so the overall market, which will bring a lot of the quality companies into super bargain territories.
Yeah, and like you mentioned, different sectors. I was just kind of looking at SMH ETF, like the semiconductor ETF from its peak. It is kind of like it's down over 21%. So I know there's a lot of comments of kind of the technicality of what's a crash, what's a correction. Um, so like you mentioned, certain sectors have seen more. It's all kind of sector dependent. And I think that's always the case. Certain sectors see a crash before others, and certain recover faster than others. And I think that's the story that's going to play out.
Yeah, agreed. Especially if you have higher beta stocks. I mean, the market drops 1%, my portfolio probably drops 2% or so. If the market goes up 1%, I go up also 2-3%. So yeah, things like that happen. But overall,
Uh, Thoughts about your? Yep, I actually was looking for that question. Are you reading my mind, Neil?
yes. What price would I consider buying Tesla? I think it's now at 263 dollars. To be honest, I said to myself 250. I'll start maybe adding a bit to my position. I mean, it's not that far away from it, so yeah, $13 won't really hurt my feelings. But right now, I'm in no rush. It's already such a big company, like you with Nvidia, for example. Like you're not in a rush to buy it. So the same thing with Tesla. If it goes lower, I'll buy it a bit lower. If not, that's fine. I've been buying lots of other shares at the moment, closing in on 100 shares for AMD. Come on, my bags are getting bigger and bigger. But yeah, with Tesla, I have time. I know there are lots of negative headlines. Oh, sales are down in Europe, in Germany, which is true. Sales are also down in China because guess what? The best-selling vehicle got a refresh, so you're not shipping that out. It's not the whole reason, but that's a main reason, especially in China. But if you look at the UK, which nobody talks about, sales are up year over year, quite a lot. So there are definitely positives if people actually cared to look at it. And yeah, we'll see. We'll see what happens. They announced yesterday that they're going to build the third Megapack factory in Texas, I think Houston. So that's also some very good news, because that's a money printing machine. We now have one, well, now have two, and we're going to get a third one. I don't know how long that's going to take, but it's expected to generate, what is it, $8 billion, maybe a bit more. So not bad. How about you? You're interested in Tesla sometime soon?
I'm not. I don't know, Neil. I don't think so right now. Um, but again, I haven't really looked at it again. I've just been. I think there's just so much opportunity for me in the semiconductor space. So I'd rather just focus on that at the moment. I do own shares of Tesla. But I don't know. I feel like obviously they have the robotic space. I think because the automotive market is still weak, I might still have some opportunities later on to maybe pick up shares. Maybe not at these levels, but somewhere similar to these levels. Neil, I like this question. I know you're Intel shareholders. What effect do you think the CHIPS Act news will have on the Intel turnaround timeframe? So I think the big news is the discussions during Trump's latest, their last, I forget what it was called, the discussion to the Congress. It wasn't, but he kind of mentioned that he wants to end the CHIPS Act.
Yeah, but then I don't. I haven't read through all of that other report that said that he wants to remove that, but focus on specific companies. I don't know how that's going to work. I don't know, but yeah. Overall, what effects do I think the Chip Act news will have on Intel? To be honest, I don't know. I don't know. I think the Ohio plan that they are going to delay until 2030 is already telling. Um, Plus the amount of money that they already got, which wasn't even $8 billion compared to the $100 billion that they planned on investing in the United States, is laughable, to be honest. But yeah, I don't know, that the Chips Act could maybe get revised. That could be a good thing for the overall industry if it's revised in a good way, right? Because if they really want to bring back the semiconductor industry to the United States, they will need to fund those companies. Like, those companies are not going to invest $100 billion just like that unless they're Apple and they have so much cash. But if you want to compete with China, because China, whether people like it or not, the CCP is investing in all of those companies to make sure that things grow much, much faster. So if the United States wants to compete and wants to get that back to the United States, I think they'll have to invest in the semiconductor industry. And what was it? The CHIPS Act was how much? 50, $60 billion? It's
56, I
nothing.
think.
Yeah.
Mhm.
I mean,
Com-
it's a lot of money,
Spread
but
out multiple companies. Yeah.
yeah, if you look at the overall industry, it's nothing. Like, it's a drop in the bucket.
But I would just say, I mean, whatever money Intel has gotten before already, I'm pretty sure that there could be some like legal plays of, hey, look, you guys promised me this money to do this. So I think if something ends like that, we can definitely see maybe some legal battles. And I would say Intel will probably be a winner with things like this and whoever goes against it. But even if for some reason it gets canceled, I don't think, like you mentioned, we might just see maybe Intel maybe push a little joint ventures here and there with some other companies. We've seen them do that a bit already, with either being kind of like a holdings company, maybe another semiconductor company. I think it was with I forget. There were a few that they already worked with some of their older plans. So I think we would see that just for them to build it. So I wouldn't really be too worried about it in the long term of things. I think, but it will create more volatility for the stock right now. I think anytime we hear the CHIPS Act and something bad, Intel was expected to be a big winner from it. So you would expect the price to act accordingly to it.
I agree. And I think even not MJ, but someone else, not even the other co-CEO, another guy, did talk in a conference yesterday, and he reiterated the same thing. They are still looking for those strategic partnerships, the things that they've been doing in the past, and I think that's what's going to happen as well. I think maybe the CHIPS Act goes away, but then if there are some strategic partnerships, some investments from the other players, maybe, yeah, like Marco says, maybe there are also going to be more tax incentives for those companies willing to invest in a foundry or building in the United States or things like that. Because I think in tax incentives for these big companies might actually be a very good play as well. I mean, the CHIPS Act is one thing. If you want to have a huge semiconductor industry in your own country, $60 billion is not going to cut it. And if you want the companies to invest their own money, then yeah, maybe tax incentives are going to be the way forward, which to be honest is not a bad thing, because that way you're also creating more and more jobs, which is a win-win for everyone, I guess.
Yeah, Neil. Now I got this question here from Greg. Jose, Oracle earnings in 4 days thoughts. It's down 5% today. So Oracle, I think, just like anything, this can go either direction. I think the great benefit for Oracle right now, Neil, is that Stargate project. Like I mentioned, I think Microsoft didn't want to invest dramatically in capex or invest more in capex, so they had OpenAI make a partnership with somebody else, and Oracle, I think, was the best middleman to do it. Right? It would probably been bad if it was like someone like Microsoft and Google. There was a little bit more competitive pressure there. I think Oracle is like the perfect middleman, so I think that's why Microsoft and OpenAI came to this agreement. So as long as AI continues to innovate and the need for huge capacity, now in the Stargate program, Oracle will be a massive winner in the cloud space. Now, the only, I would say, now there's two things that I see bearish for Oracle. First is how much is the market expecting in growth right now? That Stargate program is going to take some time. Um, and if they're expecting that revenue right away, maybe the market might be disappointed. The second thing is we did see Oracle kind of throw a fit against the AI diffusion law, which really hurts them a little bit more than some of the other players because they do have a lot of international clouds all over. So that could be a bearish thing. I liked Oracle a year ago. I'm still bullish. I still own the stock. But I think if I was to pick, and my bullish thesis was just the overall growth of cloud space or of the cloud infrastructure market. I think if that was my main thesis has now shifted more to Google. So I would just, if I was to choose one over the other, I think Google would be my favorite right now. But Oracle is still one that can benefit from the AI adoptions.
Yeah, and to be honest, it's one of those names also that has run up quite a lot. Although previously a year ago was a bit mispriced, but now still it goes into that same category of momentum. It has gone up, some announcements, it goes up even further and further, and now the market is just waiting to see more financial results. Another company that did not get the same favor is Micron, and Micron, of course, made in America, is in my opinion a big aspect of all of it. I think Micron again is just getting disregarded for one reason or another. I just don't know. Like Micron right now, I think was it back in the low 90s or something? Oh, 89.94.
No
Wow,
way.
89.94 at the moment, which is insane. Is insane because this is a company that has a lot of momentum, even though there are still a little bit some short-term headwinds. It's a company that's becoming increasingly more important, especially in the next, for sure, next 2.5 years or so. Plus, yeah, like Scoop says, it's made in America, so it should definitely benefit from this whole, I would say, tariff war or whatever. What do you think, Micron?
Yeah, I mean, I think the Made in America thing is definitely strong for them, but I think the biggest thing is we've heard from TSMC, obviously that investment here in the United States, but just in the last earnings that they're investing heavily in capex because they're going to see growth in a lot of different markets, not just the AI accelerator market. So all those other markets need memory, Neil, right? So Micron is another one, that I think follows that same route in all the other AI plays where they have AI revenue, but all their other core markets have been very weak. So it doesn't really look like an AI company if you're just looking at top level financials. I think this year with the turnaround story in the PC space, in the phone business, in the automotive business, Micron can benefit from all that. So I guess one of those tailwinds could be made in America. I think for me, the biggest tailwinds is just the overall growth in every market that has kind of been down in forms of inventory.
Yeah, I agree. I mean, the more I look at the market, the more I'm like, plenty of bargains. I think me, a couple of years from now, are going to say thank you for buying. Thank you for buying more shares of great companies that are trading at attractive prices at the moment. And I know lower can go lower, right? Lower can go lower. Macro can affect the overall market. We don't know what will happen, etc., etc. That's fine. But we invest in specific companies. So we look at those specific companies. If those specific companies offer us great value today, I don't really care what the headline is today or tomorrow. Of course, having a cash position is always important, but will it matter a couple of years from now? Probably not. Probably not. I mean, unlikely.
I like this question. I don't know who it was directed to. I'm gonna guess it may be to me. If you are in so many semis, why not just buy a semi ETF? And even though I talk a lot about semis, I would say my core positions are really just Nvidia, AMD. I do have Marvell, but it's nowhere near like the position size. And I like to invest in companies that I believe can outperform the market. And the semiconductor market, has so many different industries. I have like your Lam research as well, and kind of the equipment players, but a semiconductor ETF, you're going to be investing in markets that are pretty weak at the moment and has so many, you're just going to get market returns. So I try to find the companies that I believe will outperform within those markets. If there was maybe a semiconductor ETF, I would get that, but there is no semiconductor equipment ETF, but there's no semiconductor equipment ETF. I think the equipment market is going to vastly outperform the semiconductor ETF. So just like any other ETF, you lose out by just diversify. You're going to limit your growth. So I tend to find the companies that I believe will vastly outperform. And that's why, I don't tend to own some of the big players like TSM, like ASML, because I believe at the end of the day, those more than not are just going to perform like a semiconductor ETF in general.
Even if the price drops more for let's say TSM, it's now at $177. If it's at 150, you would have the same opinion?
I think with stocks like that, in the short term, like in the 1 year or 2 year, you would expect you could expect them to outperform the semiconductor ETF. But then in my opinion, that means you have to be a little bit more active in your investments.
Mm-hmm.
If you are planning on buying these for like 10 years, or multiple holdings, I think within those 10 years, those companies like TSM and ASML would be very similar to the ETF in general. So I guess I think right now, Neil, the only thing I can really be extremely active in is just going to be my AI plays. And if I start to overstretch myself in how active I would want to be, I think I'm going to make a lot of mistakes. But yeah, I think like companies like TSM and ASML in the short term, like a few quarters, a few years, could outperform the ETF. But when you look at that long-term stretch, I think they're going to be very much ETF market performers.
Okay, so we're going here for maximizing upside while also having exposure to obviously the same team and the same sector. Okay, no, makes sense. There are three questions maybe we should touch on. One thing I want to say here: the Atlanta Fed projections, the GDP number that is way under what was previously expected. It's purely because of imports, purely because of tariffs anticipation. So imports are bringing the whole GDP projections down, which, to be honest, is expected. It's part of that formula. If you have a huge increase in imports, that usually brings the overall number down. Then, oh, you clicked on something? I don't know.
I don't think I did. If I did, I'm sorry.
No, it's anyways this one. What are favorable conditions for Alphabet in the next 12 plus months?
Oh, that's for me, Jags. For me, Alphabet, I think favorable conditions are one, AI continues to get cheaper, and we're seeing that. So they're going to be able to open up their gates of all the AI products that they have. Right now, I think they are gatekeeping a lot of their own AI products because it's just too expensive to run. But as AI gets cheaper, they'll be able to do that and be able to continue to hold massive market shares in all their core products. The second favorable condition for Alphabet that I believe will be is just their overall growth in data cloud in cloud infrastructure market share. The main reason I think that is going to be, I think it's there, is because right now we are in a capacity constraint. All these cloud players, if they had the power infrastructure, if they had the chip infrastructure, they would be able to grow their clouding market faster. Google Alphabet has one lead that no other cloud player has. They have their TPUs. They've been developing their own chips for over 7 years. They're the best at it. Sure, Amazon has the Trainium. Sure, Microsoft has something else, but nothing is as good as the TPU compared to those ASIC. NVIDIA is a whole completely lead game, but Google can both buy their own NVIDIA's GPUs and can also build massively of their TPUs and grow the market share a lot faster than Microsoft, a lot faster than Amazon. And the overall market, Neil, is just punishing them due to other segments as well. But I think once we start to see that huge growth in cloud, the market's going to be like, hey, look, Google is definitely pretty cheap right now.
I agree, and I want to show everyone something. This was from a blog that was released, I think, 3 days ago. And if we scroll down and we look at the Connect with Consumer on search, I don't know if it's zoomed in, maybe a little bit more, we can see that they said the following. They already see more than 5 trillion searches on Google annually, which is up quite a lot since, I believe, the 2 trillion searches that they announced, I don't know, a couple of years ago, which is quite good. They also said the following. For example, with the launch of AI overviews, which is also, I'll show you in just a second, the volume of commercial queries has increased. And AI overviews is basically this, if I can find it. It's basically this. I think you have access to that as well. Me in the Stone Age of Europe, I don't think we have this yet, but this is basically it. You search for something, you have this AI mode, and it's basically what Perplexity is doing, but now it's Google. So yeah, another one of their advantages here. You are muted.
And I like this comment here, Neil, Aaron, but Google price hasn't done much for last 1 year. Is it weird for me to think that's okay, Neil? I like that doesn't bother me. Past price performance doesn't affect me as long as I feel there is growth potential in the future. I mean, I think you can say kind of the similar story for NVIDIA. It hasn't really done much if you look at it maybe for the past year now, but that's okay. So I'd rather be early to this than kind of then buy the stock a little higher and ride the wave up where my risk to reward ratio has eliminated. But again, maybe if you can be more active with it, you might have better luck finding when the turnaround story happens. For me, I'm okay my stock price not doing anything for a year. But again, it's not I'm not saying, I think in the market, there's always multiple answers. It's not just yes or no. You could also just wait and maybe wait for the turnaround in the stock price. But that's just not my investment style.
And by the way, and this might be maybe the sentiment and why retail is not that happy. Google stock is up 30% year over year, which is more than outperforming the market. So if that means it hasn't done much, then I think we're having some issues here, because up 30% in a year, I mean, I'll take it. I'll take it any day, right? To be up 30% in a year, why not? It's true that maybe in the last couple of months, maybe in the last couple of months it has stayed at around the same prices right now, but you're still up 30% year over year, which is not bad at all.
I agree, Neil. And then X was like, Aaron, let's hope it stays that way. I do feel also a lot of investors kind of feel similar thoughts, Neil, where they don't mind. Some of us just can only put money on a weekly basis, so we can't increase our share counts dramatically in one buy. So I think some of us are like X here, where we want to see this price pretty low for a few, so we can have multiple weeks of buying and build up that share.
Yeah, no, I agree. I think there was someone who commented under one of my PayPal video, I think a couple of days ago, when I talked about the opportunity cost of buying something like PayPal, which, okay, it's true that right now might be considered opportunity cost, but like we talked about in the last episode, like if you're underperforming for 3 years, but then in the fourth year it outperforms the whole market for the last 4 years, we will be happy. And that commenter said basically, Opportunity cost for retail means I want the stock to go up instantly and not wait for long-term gains. That's basically it. And to be honest, we as content creators, we see a lot of comments, and I can say that I agree with that commentary 99%, because it's true. You don't know, like when we say, oh, it's opportunity cost, who knows? Like buying PayPal today or any other stock today, how do you know if it's opportunity cost or not? Like, if you can tell me that for sure a certain stock will not go up or outperform the market in the next couple of years, then okay, I'll pay you a nice fee for that prediction. But the opportunity cost comment is most likely always about hindsight. Like, oh, you see, you shouldn't have bought it because it hasn't done much, and another stock did. To me, it just doesn't make much sense, and I think those are comments that we usually get after 2 years of huge bull markets.
Neil, I like this one here. Just to follow up from Jags, any thoughts? Does Google have any place in robotics? I mean, I think you can kind of maybe say Waymo is a robotics play. I mean, we've heard from Elon Musk that he believes cars are just a big robot, and I agree to that sentiment. The other sentiment is I do believe a lot of the training you do in the automotive segment can somehow or somewhat translate, not 100% translation, but translate into things like mobility robots, humanoid robots, industrial robots, and the list goes on and on. The kind of just in the kind of advancements you might make in things like vision, like LiDAR or whatever being from Google, all that can translate into advancements in other places as well. I also realized that they do have kind of like a software play in intrinsic, a software and AI robotics subsidiary of Alphabet that acquired the open source robotics corporation in late 2022. So it does seem like they do have some form of like robotics software play as well. So I think if there might be others, I think they might be in a drone company as well, Neo. Some of those smaller bets, but nothing else that I can think about.
Yeah, I think with Google, it's a lot of small bets. The big one is of course Waymo, which is not really a bet anymore, but it's definitely lots of smaller bets in other companies. And then it's probably, I mean, they have Android, so I guess there is that, because it might be an operating system for a company, for plenty of other robotics company, maybe in the future. Who knows? I think Google will still come out with the Google Glass, but now a much better Google Glass, because it's quite crazy that they came out with the Google Glass over 10 years ago. They're just ahead of their time. So yeah, I think with Google you have so much optionality. Someone is asking here about Amazon at $200. I mean, Amazon is my second largest position, now very close to Tesla, to be honest. To me, Amazon is also one of these no-brainers because it's so strong. AWS is so big, getting bigger. Advertising, subscription. It's an amazing company. I mean, it's an amazing company, and to be honest, during tough times, and Amazon will still do well, because I mean, if you need stuff, you'll just buy it for cheap on Amazon and get it delivered in one day. So to me, Amazon is one of those. I don't have that many buy and hold stocks because I forever, because I don't believe in buy and hold forever, because eventually you want to take that money out. But an Amazon would probably be one of those companies that I'll probably never sell, because I mean, who will destroy an Amazon? I don't know.
I can't think of anybody who's going to destroy Amazon. Any other thoughts you might have, Neil? I think we have like one more question.
Do you follow the Big Bear?
I do not follow them, Neil. I definitely see as one. On a top level overview, I see them as one of those stocks that in the AI market is more of like speculative play than a company that can benefit from their core market. So I'm not too excited about it, but I don't know much about it at the same time.
Same here. And if I'm being honest, last time I checked on it, it's one of those AI hype stocks that just went up. Yes, I know it got some contracts here and there, but still losing quite a lot of money and just enjoying the AI team, not really taking it very seriously, to be honest.
Yeah, and with with high plays, Neil, I want to say obviously there's growth opportunities. With high plays, it's more just, in my opinion, the risk to reward ratio is just not there anymore. And as an investor, I like to I like to really look at that risk to reward ratio. And while it can go up, it can continue to go up. I would be happy that I didn't buy because I felt like, hey, look, it didn't meet my criteria, and I don't want to kind of ride that wave.
I agree. I agree. I mean, you can make a lot of money in the short run with lots of smaller AI companies, AI plays, but then again, you'll have to check on them on a daily basis because it can go up 30%, can go down 50% as well for no other good reason other than hype or no hype. So yeah.
And he says he owns, and I'm pretty sure Neil and I are gonna wish you the best luck. We obviously don't feel
Yep.
wish stocks go down. So if you own it, whoever owns it, best of luck during earnings. I hope you guys make money.
For sure. Um, let's see. Maybe there's one more. If not, then not. I think yeah, Uber is actually doing okay. You know, I think we might have found something interesting here with Uber holding its ground at around $76. So it does seem like 2025 started off like a contrarian play type of year. Alibaba outperforming, European stocks outperforming by quite a lot actually. Uber outperforming despite people thinking that around $60 this is a dead company, but no, I guess not. I guess now is the time to go contrarian. So yeah. Anyways, not so fun day in the market, but fun to talk with you guys about stocks,
Agree.
companies, macro. It's always nice to talk with people when these things happen because usually when we make videos we can only react through comments. With these live streams we can react live. It's always good to calm down the nerves. When you look at your portfolio, you're down a lot. I'm down a lot. Not gonna lie, but not really stressing out. To be honest, we've had 2 great years overall. Yeah, I missed on my afternoon nap as well.
Neil, I'm just gonna say one thing though. I know you're going drinking tonight. Just don't drunk call me, okay? That's all I'm saying. Just don't drunk call me tonight.
I hope I will not drunk sell or buy anything either. I'm like, ooh, Nvidia 100. Let's put in an order.
All right, guys. Yeah, appreciate the support and thank you so much. And we'll be back Tuesday with episode 17, 18,
Yeah,
19, 20,
you know,
29.
I was like with episode 117, but I'm like, no, that's the number of shares maybe. But yeah, we'll be back on Tuesday, hopefully with some better news.